Good evening, TheoTrade. This is Corey Rosenblum, and watch the Theo Nightly video for the 8th of February here in 2022. And I'll title today's video something about stuck in the middle with you, because let's just draw some quick levels on the S&P. So on our daily chart, we'll focus on that for the moment. At about 4,800 is the upper high, and that's earlier, or actually right at the beginning of 2022. We'll call this a range support low and a little bit of a high at about 4,300. So quick reference puts that midpoint just about, roughly speaking, the 4,550. And that is about where the market is. So stuck in the middle means right here at the middle or the midpoint. Think about this like a probability distribution, and we get the middle of the middle. But wait, there's more. On the volume profile on the right, just these key levels, the point of control, just for quick reference, point of control is the highest volume node on the profile, and that is about 4,500, just above it. So that's in the middle of the middle of the middle. Not a lot to go on there. And that is, to my opinion, a little comforting, knowing that we just had a strong bout of volatility on the way down. The most part of January has been, with a few days of exceptions, straight down. And the better part of February has been volatile, wide range days, or even trend days in both directions. So we had the strong pullback. That is the S&P. Where are we on the NASDAQ? A little bit lower than the middle. What key levels are we referencing there? Again, looking at this on a big perspective, 16,500 is the upper, roughly speaking, bound. And this isn't really as clear as the S&P, but we'll put simple terms, 14,000. That's going to be our low. That makes the middle about 15,500. And that is, again, think about probability distribution curves. That's like a little bell curve as best we can draw. And that's the logic. We are actually under that distribution. And on the Dow mini futures, they had a little of a range. So unlike the S&P and the NASDAQ, which went strong into the latter part, we had a more of a trading range, a sideways trading range in the Dow mini futures. So again, thinking about the middle, if we keep that context rolling, that was about 36,500 and about the 3400 bound, which puts the middle right about this almost about 352 or 353. Nothing spectacular too much right there, but we are having some interest in the Russell. And that Russell will pull this chart a little bit further. And again, just drawing your attention to these sideways ranges, we'll make that a little bit farther back in time and pinpoint these ranges, which we've done at about 23.25, roughly speaking, and about 21.25. That puts the middle at about 22.25. The Russell at this point is coming up from well beneath that range low, or the breakdown that took place earlier in January. Outside of that, while we're on the topic, and I've been discussing some earnings the last few videos, let's pull this perspective and just do a quick overview in tonight's video about around the market and around supply and demand. Where's the money flowing? Well, it's in the midpoint, just came out of equities in the bulk of January and pulled back in. So February, at least at this point, has been a bounce back inside that range. But that's not what's happening in crude oil. And we can also throw in the XLE energy sector and some stocks within that, which would include, they actually were all weak today, but ExxonMobil has played strongly. Again, we're looking at the better part of January and into February. And then ConocoPhillips, and then Chevron Texaco. Those are tied in large part to the crude oil or energy prices in general. Again, that XLE, and that's the standout for today's session. In fact, looking at everything across the board, it was all green, including gold, except for the bond market, which we'll cover in a moment. There's all green. And the leading stocks today, Amgen, DuPont, American Express, T-Mobile, Capital One Financial, and just general financial stocks. And then Amazon snuck into the top list, being up over 2% in today's session. Everything was green except for the energy sector. And that's a little bit of, dare we say, chickens coming home to roost, or the market which has gone straight up when the broader equity market has gone down, maybe it's time for crude to pull a little bit lower, and that's going to play into energy stocks as well. And again, that market has, think about this on a broader perspective. Keep this in mind in terms of the beginning of January on the S&P, which is, for the most part, straight down. And then again, energy, which was up. And the way we can look at this, we'll actually add the bond market and others, including gold, into the mix. This is the intermarket grid. And this takes us through the bulk of January into present. So the equity futures, this is your S&P, has been down for the most part and has rallied up and is now trading through the middle. Crude, which is typically tied or at least correlates with the equity market, has been strong uptrend, series of higher highs and higher lows. Gold, on the other hand, has been sideways. So for the bulk of mid-January into currently in February, we would say gold has been massively unchanged. It hasn't gone anywhere, at least in terms of the last month. The high of gold was about 1850 and the low was about 1780. Once again, theme of tonight's video, back to the middle, straight to the middle, all right? Caught in the middle, stuck in the middle with you. That's gold. But in terms of the bond market, looking at ZN futures, we have a downtrend. So in general, taking a step back, looking at all these markets together and all the lines drawn on the chart, for the most part, equities were weak, stabilized, and came back. Gold stabilized for the better part of the last month. Crude oil has been stabilizing and at least been uptrending. That's been the outperformer, generally speaking. And the bond market has been downtrending. So money has flowed out of equities, out of the bond market, not into gold, into oil, and maybe into other assets that are beyond what I like to look at here on the intermarket grid. Now, speaking of the bond market, we'll pull up TLT, and it has been in a downtrend since peaking in late 2020 or 2021, and that has now pushed to lows. This is a new yearly low, and if you don't trade the bond market, if you look at the yield, it's helpful to look at that, the 10-year Treasury yield that is seen by symbol, at least in Thinkorswim here, in TNX. What does this mean? What is TNX? TNX is the 10-year Treasury yield. And we'll actually pull that back a little farther on the time frame. And I have these levels marked off. 30, 20, and 10 per this contract would refer to 3% up here, 2% right here, and then 1% on Treasury yields. Remember, the Fed is at least telling us they're going to raise rates, and currently they don't control the long bond. They control the Fed funds rate, overnight funds rate. But the yields in general are going up, and we see yields, at least in the TNX, coming close. I think this may be the big headline that I am burying the lead on in tonight's video. And that's the TNX, the 10-year Treasury yield, is coming up to that 2% level. It's been there before, but not since. Right before, or right a little bit before that COVID and pandemic shutdown risk in early 2020. And we're just back to those levels seen right before that event. So that is something to watch. And again, just to keep the theme going, back in the middle is about 2% between the 3.0 and the 1% bound. I don't have much to say about gold, and I think that's the biggest thing, is if you're expecting inflation, and we are getting inflation, gold had a strong run in 2019, 2020, but not really has the price gone anywhere. It really hasn't continued to the upside, despite now we're getting evidence of all the inflation, and it's a foregone conclusion how inflation's affecting the broader economy and producer price index, consumer price index, and all the other functions about inflation. Gold hasn't moved since this sideways trading range has developed really at the latter part of, or middle part really, of 2020 and to the bulk of 2021. So again, those levels to reference as we focus on big picture concepts in the middle, that is about 1825 in gold. And that's where the market trades. That's where the S&P trades, in the middle of its range. Of course, the other indexes as well. The only one that is not, once again, is crude oil. And that pushes new, I wouldn't say all-time highs, but new highs, new contract highs as seen. We'll go back. When was the last time we saw this on the continual contract? It was far back. Again, this is upwards of the 90 per barrel level. We'll have to go to a 10-year look back to see that last time that traded, again, this is a continual contract, but was roughly 2014. So crude itself has been volatile, and the contract went much lower than I think myself and many other people thought it could have gone. But nonetheless, that recovery has taken it to new recovery highs, and that's, again, above 2018 and last seen about 2014. So careful, cautious in terms of the week ahead. A quick check. We see on Wednesday industrial production, the 10-year note. We just talked about that. We have an auction. PPI is a producer price index. CPI is going to be the consumer price index. We'll watch that closely. And into consumer sentiment, that'll be Friday. Of course, we'll keep you informed about these news events, and you can always check the calendar and set alerts if needed about what key economic reports are coming up this week. Not seeing a lot of earnings, at least not from the big monsters of tech. We will be watching these reports and these midpoint price levels. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for February 8th, 2022.